How are you feeling about the market as a whole right now?
It feels like we're definitely in a bull market, or at least heading into one. It's very concentrated though on who's benefiting from it. I think a big change from the last cycle is the saturation of tokens and different protocols.
McKendry, core contributor at Bolt Liquidity, the first zero-slippage liquidity network that powers real-time, cross-chain execution with CEX-level precision.
What's one change that you've seen when you first came into space to now that's been like the biggest difference?
I would say the biggest difference is we went from just building like protocols and infrastructure to actually building applications and use cases.
Can you give a little bit of a rundown of what Bolt Liquidity is specifically?
Bolt Liquidity is a concept that we kind of designed based off issues that builders but then users have faced in this space for a long time. And it's really around like inefficiency of liquidity and really swapping.
How would you describe what it's like working in Web3?
You can't really turn it off. When you're just participating from like a casual standpoint, you can at any point just kind of be like, all right, I'm not gonna pay attention to what's going on. I'm just gonna take a break. When you're in it, you really can't take a break.
What are you guys set to achieve in the first year for Bolt Liquidity?
I would say
Welcome back to the Lock-In or Log-Off podcast, where I speak to builders, creators, and investors to understand how they spotted the opportunity and how they navigated their way to success. Today, I'm joined by Max, core contributor at Bolt Liquidity. How's it going, man?
it's going great, man. Couldn't be in a better spot here in Mykonos, so.
Yeah, it's this is definitely one of the most bespoke places I've ever done a podcast, and one of the most excited I've been for, to be honest. We'll go into a little bit more around why we are in Mykonos doing this podcast a little bit later in the episode. But I like to kick things off to understand a little bit more of people's stories, to kind of understand how they got to where they are now.
Yeah.
What was life like for you before Web3, and how did you kind of navigate your way into the space?
Yeah, I mean, I would say the way I got into this space was a little non-traditional. So I started out in finance and accounting. So I went to school for that, and that's really where I expected to be for most, if not my entire career. But yeah, over time, I just was always interested in crypto since probably like 2016, 17. I started to actually really pay attention to the technology and trying to understand what its true use case was. And I think around that time is when Ethereum came out with the idea of smart contracts. And to me, that really like connected and made sense to me, like the different use cases you could have with the smart contract and the idea that you could actually build applications on top of these blockchains, which prior to that, I don't think I really fully grasped the value of, let's say, like a Bitcoin that was just a ledger. I think now I have a lot more appreciation for things like Bitcoin, but at the time it didn't really excite me like the idea of Ethereum did. So I just kind of paid attention to it, and then around 2018 or 19, I really started to get engaged in like the Twitter community and just talking to people about different blockchains and learning more about them. And what I realized was like a really engaging community. Like you could talk to really notable builders and like powerful people in the space very easily through Twitter. And then just kind of being part of that community over years, kind of built my own little niche doing threads and educating people in words that I thought most normal people could understand. And that ultimately led me to getting a role or finding an opportunity with Phi Labs. And that's really how I got involved full time in the space with them, which is a development company that built a layer one in the Cosmos called Archway.
Interesting. You obviously mentioned when you came into and you were networking with a lot of people, it was so easy to connect with amazing people. That was exactly why I decided to go further down the route in Web3, because like the bear markets happened. So I came in 2021. Obviously NFT craze, loads of
Yeah,
fun, people made a lot of money.
DeFi summer.
DeFi summer, and then it went into the bear market, and we were like, nothing from a financial perspective, there wasn't too much to keep people there, right?
Yeah.
But the thing that kept me there was like, I've always had a passion for startups. I've always wanted to learn and understand that environment a lot better. And I noticed that like I was always like one person away from like speaking to some of the CEOs of the biggest
Yeah.
companies in crypto. And you're just there like, this could never happen in the traditional world. And it unlocks opportunity for like networking, but also learning from like incredibly talented people in this space. But you obviously come from a finance background. It's quite interesting to hear that like Ethereum was the part that hooked you most,
Yeah.
because I feel like most of the financial side of things, they all see Bitcoin as a store of values, like basically the equivalent to gold, but digitized. Um, how did you, when going from finance into Web3 specifically, why did the Bitcoin side of things not click for you?
Well, I would say like Bitcoin, the idea clicked in the sense of like a immutable ledger, because coming from accounting, that's actually very familiar to me, is like this idea of tracking transactions and having a ledger. So that made sense to me. I guess it just wasn't exciting. It didn't, like, I couldn't see the full vision of why this was so valuable or what type of like groundbreaking changes it would bring. But I could see it with things like smart contracts, because I'm thinking from, even what I was doing at the time in like finance, it's like you could use these for very simple things like escrowing funds and not having to rely on like third party intermediaries, and having it all be based on contracts and not really having that human, you know, kind of blocker to and really risk that a human brings into a decision making process. So immediately with Ethereum, I felt like, okay, I can see how this translate into like the real world in terms of how smart contracts could be used. And so that's what really just like made me think this could be the next big technology. And that's why I just started to hyper focus on it. Like I'd be working on my day to day, but constantly, reading white papers and like learning about technology, because when you first enter the space, everything is so foreign.
Yeah.
Like all the different wording, the just understanding how blockchains work, the differences between the types of blockchains that exist. So spent a lot of time trying to like get to the bottom of what made sense to me. And Ethereum was actually probably what got me into the space. And then it was actually the Cosmos Hub and the idea of the Cosmos SDK that really like drew me in, because I thought the idea of this interconnected chains made a lot of sense. I really thought the stack, when I was reviewing it myself, made a lot of sense. Over time, I don't know if I still fully agree that it's the best stack. I think there are a lot of really good options at this point, but those were the two main, I guess, like networks or VMs that really interested me and got me like, full in, locked into this space and wanting to do it full time.
It's interesting because you've come from a position of like a lot more interest in the tech. Then obviously, I'm sure there was a financial part that interested you, but I think a
Yeah,
lot of people I do speak to, like especially those who came in 2021, I think a lot of like that generation that came in was because there was just such a huge
yeah.
influx of like craziness, and then like the people who stayed ended up going a lot more down the line of like, okay, this tech is super interesting. How did, when you were obviously at your finance job and kind of in this industry, how did you like speak to a lot of your coworkers around the
Yeah.
crypto side, and what was that reception like?
I did. I actually spoke to a lot of my coworkers about it because they realized how interested I was in it. They pretty much took it as a joke. Like they thought I was insane for thinking that this was anything more than magic internet money and speculative investments. And it was interesting because I would try to explain it to them from more of the tech side, right? Like I think I did get into it partially because I thought there was a lot of asymmetric upside to getting in early with the technology. But I also was like, hey, this I could genuinely see this replacing a lot of existing infrastructure that we use in accounting or everyday life. So I tried to explain it to him in like real world like ideas, like, hey, right now when you transfer a title for a house, you have to go through these like title agencies and you have to go through all these checks, and then you have to get insurance for your title because there's a chance that it wasn't properly transferred by the bank at some point. And so you really don't own your house. But what if you just had a smart contract that could transfer the title directly and you could always see exactly who owns it, who held it, where its line of like, ownership has been since it existed? This all could be on the blockchain. And then I'd explain it to them in like the accounting side of like, what if all the transactions were automatically recorded in a way that couldn't be changed? Or that if you had to change them, you'd have to do it in a way that you're showing, this was the original transaction, here's how we fixed it, and then here's the new one to get us to, balancing your balance sheet or whatever. So I tried to like apply it in real world. And even then they're just like, yeah, I just don't think this will ever be anything more than, play money. And then
Yeah,
it was really odd because no matter what I did, it just never clicked. And I bet you a lot of them probably still think about that and are
yeah.
like, man, I really wish I would have bought Ethereum and Bitcoin in 2017 when that one kid was talking about it all the
Yeah.
time. And I think I wish I would have bought more too. So
Yeah, I think that's I've asked a few people like if you could to change one thing about your journey in Web3, and a lot of them be like, yeah, I wish I bought more Bitcoin back when I first came
yeah,
into this space. Yeah, it's interesting. I think we're starting to see more people. Obviously, now it's crazy to like even look back at like 2021 to where we are now in terms of people's perception and acceptance of
Yeah.
cryptocurrency now. I think I think a lot of them now come around because they see a lot of the governments like kind of supporting it now, especially the US becoming a lot more pro crypto has changed a lot of sentiment. I think from like the retail audience and everything like that, it's become more of a normality.
Yeah.
But yeah, it was if you were a believer back then, I think it was pretty tough. What do you
It
think?
was.
What do you think kept you so convicted, considering the people you were around probably just were all saying that it's like it's a facade?
Honestly, I felt like the fact that they were so against it made me like want to dig my heels in further. Like I don't know if it's just stubbornness, but like the more they told me I was wrong, the more I was like, I think I'm right.
Yeah,
And I would just get deeper and deeper into it because I'd basically want to learn more and more and try to, get as many fact points as I could to counter whatever they were trying to say.
yeah,
So for me, it was almost like made me want to double down every time on learning about it and making sure that I am not the crazy one in the room who thinks this could work. But I think as you see like institutional adoption, like you said, with government starting to adopt it and become more open to the concept of it, I think we're pretty much, you could say that we were probably correct in the fact that it wasn't just a bunch of magic internet money.
still gets called that, but
Yeah,
there's more use cases to it now.
I definitely feel like the sentiment from the people I talked to, even some of the people I used to work with back then who still keep in touch, they've definitely come around quite a bit. Now they're more or less asking me for information on certain tokens or hey, can you explain this or what makes this, chain unique? Like they're definitely more their interests are peaked a little bit more now, whereas before they didn't care. They didn't
Yeah,
even want to learn. They just basically were like, okay, dude, like move on. Good
yeah.
luck.
And that's the benefit of being an early believer in all techs, right? I was at a Stephen Bartlett's kind of talk at some point, and he was speaking about like how all new techs kind of the people who adopted very early on are those that kind of lean in. But fundamentally, the human instinct is to lean out because it's change, right?
Yeah.
It's friction, it's change, feels uncomfortable, and in DNA of humans tends to be something that you kind of lean away from and kind of avoid. And then you get those few people that lean in, and those are kind of the pioneers within those industries. And I think the more and more time I've spent in crypto, I've seen that happen. Of like for the first few years, everyone was leaning out, especially when it went into the bear market after 2021. Everyone's like, oh yeah, like I was right. I was right about it being like it not working out or it not going
Yeah.
crazy. But if you did believe, obviously it's shaped out to be very different. So I think how everyone initially viewed it. I think that's with all techs. I think this will be the same with AI. But what's one change that you've seen from your own perception when you first came into space to now that's been like the biggest difference?
I would say the biggest difference is we went from just building like protocols and infrastructure to actually building applications and use cases. And I think that was a major turning point in the space was like the idea that it's more than just this, blockchain that stores data and has a token tied to it that's speculative. And now there's like a real business use case for it in the sense that I like to describe it to normies as think about a blockchain like the iOS on your iPhone.
Yeah.
It's like a platform that allows you to build applications on top of it. And that seems to like resonate with people and then they can kind of get the idea of it. And when you think about like an iPhone, for example, if you had no apps on it, it really wouldn't be that useful. But now that you have those things on chain, I think it becomes a lot more useful and then a lot more interesting for people, and gives them a reason to go out of their way to get involved in the space or check it out. So I think as we build more consumer apps, things that appeal to more than just Web3 people, for example, outside of let's say DeFi, I think that'll be great for adoption and will really get people to think about blockchains differently and think them as more of a building block for businesses and different real world use cases more than just these speculative assets tied to a chain.
Yeah, I totally agree. And I think we're starting to see that a lot more. Even like RWAs and everything like that is a big step forward of having a better application of like why this
Yeah.
tech is so much better. I mean, stable coins are the best use case. They
Yeah.
not the use case CT talks about because
Yeah.
there's not as much way to make money with it, but they are the best part of like, in my opinion, they're the best innovation that crypto has brought to this to like broader retail and just like everyone in the world.
Yeah, and that's the biggest piece you just mentioned is like everyone in the world is like when you look outside of like your core like DeFi or just like Web3 users, the only other people that are really using blockchains like significantly are like countries with high inflation, so like in South America, and they're actually using these specifically for like money transferring and storing their value in stables.
Yeah.
And it's become like a use case that's not tied really to Web3 at all, other than it's a very viable way for people to handle and transmit money in their normal everyday lives. So I think that is a big piece of the puzzle, is like things like stablecoins that just provide value to an average person who might not care about the tech,
Yeah.
might not care about using applications, but they need to, have a stable form of fiat to hold on to, or they need to be able to send money places quickly,
Mm.
and trust that it's going to get there, and not have to pay significant fees like a wire or something like that. So I definitely agree that that's probably the biggest use case, and what's really moved it forward the most is like seeing countries adopt
Yeah.
crypto as like a form of payment.
Yeah. I think it's and it'll only continue to grow. On the Obviously you're in traditional finance and you've mentioned how you came into this space.
Yeah.
Um, what did that transition look like? How did you get the opportunity in the space, but
Yeah.
also what made you make the decision like, okay, I want to go? Because like working with three is, we can go into what it is like, and it is amazing in many
Yeah,
ways,
it is.
but there's also a high risk to it, especially
Yes.
the time that you made the move into this industry. There's been like a lot of, like, you go into bear markets, there's huge amount of layoffs and so forth within the industry. It's highly volatile in the good and the bad.
Yeah.
But yeah, what made you make the decision to make the move, and how did that all kind of play out?
Yeah. I mean, I think really what it was is I was in a job that I thought, was going to be my career path forever, kind of like I mentioned. And what I realized is I just wasn't enjoying it that much. And I was spending almost all my free time either participating like blockchain networks, whether through its apps or on Twitter, or just reading about the technology. And I realized like I have a true passion for this. So I was spending all my time doing that and then just working because it was my job. So it was one of those things where I was like, hey, it would be cool if I could be full time in Web3, but never thought the opportunity would exist. And even if it did, to your point, I was like, can I really leave this stable job that I have, where I have a degree for and all these different things, and experience, to go take this risk? But I actually got a really cool opportunity because me and a friend had spun up a validator business, I think in probably like 2020. And so we were validating Cosmos and IBC chains. And I was reaching out to a lot of the different core teams to discuss getting delegations and what type of services we could offer them, outside of just, being a validator. And one of the teams I reached out to was Archway. And when I was talking to them, I was originally just going for a delegation, like, hey, can you guys help me out so I can get in the active set and, contribute to your ecosystem? This is before they were on mainnet, so this is still on testnet. And as I was talking to the team, I was just, having casual conversations with them. They were asking me questions and, what I'm up to. And they basically said, hey, we have like an open position on the business development side. We're looking for someone who has a strong understanding of the space, is like participates in it. You seem like you have a good, understanding, would be a good fit. Would you be interested in joining our team full time? And I was kind of like, I don't really know. Like, I guess I'll hear out the offer. Send me over what you guys have. And basically, they sent me over an offer that was, for me, an offer I couldn't refuse. It's very, it was very much the opposite of what I expected, right? A lot of times people think you work in crypto. Okay, you're probably getting paid in tokens. You probably don't have insurance, all these things. And it was the exact opposite. They were running it like a Web2 business. So they had full insurance. They paid you direct deposit to your bank account. They offered, competitive salaries. And I was just like, I think this is something I need to do. So I actually talked over with my wife, or at the time, my girlfriend, and I was kind of bringing it up like, hey, got this opportunity. What would you think about me leaving my finance job to go do this? And we had just bought a house. So this was like a very difficult thing for me to even bring up. Was
Yeah.
like, hey, I'm thinking about quitting my job and going into Web3. But she, I talked her through everything. I explained the whole offer and the opportunity. And she basically said, go for it. Like, I think you should do it. You are super passionate about this. I can tell. I know you don't like your job. So give it a shot and see what happens. And honestly, if she would not have given me that blessing, I don't think I ever would have made the jump. I don't think I had the, like, I don't know if you want to call it like the risk appetite or whatever to make that jump. But once she said you should do it, I was like, all right, like I'm in now. So I got the blessing. I felt like I was supported in that decision. So I made the jump over to Phi Labs, and I can easily say it was the best decision I've ever made. I love working in this space. I am passionate about it, so it doesn't feel like work, and I get to do things like this.
Yeah. Yeah, I mean the opportunities in this space still feel surreal to me
Yeah,
in many ways. I made the leap 2 years ago now. Um, and similarly, best decision of my life. It wasn't easy in the early days, but it's played out
yeah,
100% to be the best decision of my life. Um, but yeah, it does. It's a very different world in
mhm,
terms of like the opportunity it provides, but also like the it does come with like it's a weird thing. You have to be very passionate because it does
yeah,
come with the side of like it is 12-hour days. It's global. So like you're always working with people in Asia, America, Europe, different time zones. There's a lot of sacrifice that comes with it.
yeah.
But from your personal experience, for someone who maybe participates in Web3 but doesn't work in it, or someone who is in Web2, how would you describe what it's like working in Web3?
I would say the biggest difference is you can't really turn it off, right? Like when you're just participating from like a casual standpoint, you can at any point just kind of be like, all right, I'm not going to pay attention to what's going on. I'm just going to take a break. When you're in it, you really can't take a break. You need to be up to speed with what's going on in the space, what's happening, and when you are in bear markets or downtrends in the market, you can't just ignore it. And I mean, you can as best as you can, but ultimately you're seeing it every day, right? You're faced with all the news that's coming and all these different developments. So that's to me the biggest difference is just like being on 24/7 like you mentioned and really never being able to pause and step back away from the space. But I can also say that for me, I prefer that. I mean,
Yeah.
I feel like I'd want to be involved in paying attention at all times, so I enjoy it. Sometimes it can be taxing and draining just mentally, but ultimately it's like when I look back at my previous job and the trajectory I was going, I just feel like I have good perspective to say like, hey, this is way better than what you would be doing. So just get through these tough times and enjoy it because you might not ever get an opportunity like this again.
Yeah, I think that's something that I've had to work a lot on. Like recently, is like looking back, it's like the tough times in Web3 is like it's really hard at times, but it's doing something you love.
Yeah.
And when you kind of compare it, I used to work in marketing in the Web2 world, and I did enjoy it, but not even near like Web3 just doesn't feel like work in many
Yeah.
ways. Like every day I'm going, but it's like deep down it's something I'm so passionate about. I'm loving every day. So you really have to kind of keep that perspective with it all. And I think that's where like the line comes is like I think the space is an amazing opportunity for people who do want to work in a new tech industry, and like the opportunities that can come with is very good because like there is a huge misalignment in terms of talent and kind of demand. I
Mhm.
think there is still a big like demand gap between like there's a lot of these companies need good talent, but like the talent in many classes is not up to the Web 2 standard if you were to compare. But
Yeah.
it's because you need unique knowledge in this space. Um, but yeah, I think it's definitely an interesting industry to for those who are passionate about it to kind of go full time. If you were to give advice to someone who did want to take that leap, what would you in the market we're in now in the stage because it's very different to when you made the
Yeah.
decision. What was the advice you'd give to someone that would be interested?
I would say to really like genuinely try to understand the space, try to understand the tech because I think it's really important that if you do work in this space that you're well versed in it. I think it's really difficult to do this job if you can't go into a room or at like let's say an event and just speak with people about what's happening and understand like the problems they're having or the needs that they have that you could potentially fix or provide by having them join your network or what have you. But then I would also say like you just have to dive in and you have to like look for those opportunities and take a risk. I know for a lot of people it's a big decision and it's like you said it's very high risk and volatile, but at the same time I found that it's like any job in the sense like once you're in it, you learn, you figure out the best way to do things and it just becomes like any other job you may have had. A bit more enjoyable for sure, but that's the biggest thing I'd just say to people is like learn the tech, like try to get a strong understanding of whatever area you're trying to go into, and then just make the leap. As tough as that may seem, yeah, I think it's worth it for people.
Yeah, I think everyone I know that has made the leap and stuck to it, all kind of say similar stuff. It's like it's
Yeah.
the best decision they've ever made. It's gonna be interesting to see how it plays out. I think it's like the longer this industry goes on, the more saturated it becomes. I think everything in this industry will continue to change, even from like the work perspective. But it's been certainly a blessing. But going back a little bit to the Web3 side of things, we're in a safe to say we're in a bull market. ETH
Yeah.
is like all time high. Gone on a rally that I think people believed, but like I think everyone's still like, damn, this just happened in like
Yeah.
3 weeks. Is now up to like 4.7K. Um, how are you feeling about the market as a whole right now?
I mean, I think, like you mentioned, like it feels like we're definitely in a bull market, or at least heading into one. I think it's kind of shown that it's very concentrated though on who's benefiting from it. It seems very top heavy this cycle, whereas I think, let's say in 2021 time, it was more, you saw like altcoins making large moves and you saw the whole market like really lift. I don't think we've really seen that this time around. I think you've seen like Bitcoin, Ethereum, some of the other majors have significantly increased in value, but we haven't really seen the altcoins follow. And I think there's a couple reasons for that. I think a big change from the last cycle is just the saturation of tokens and different protocols. I think it's difficult for the whole market to move these days just because there's so many different options and we're seeing people consolidate into the majors, especially when you think about traditional like institutions. They're really only looking at some of the big players, and then retail I feel like hasn't really entered at the levels that we typically would expect in a bull market. And I think the retail is typically what drives the altcoins because of that asymmetric, risk return you get, and that's typically the type of risk appetite a retail trader will have versus an
They
institution.
want to hit it big, right? The
Yeah.
retail
They want
does
the
have a
100x,
yeah,
not the 10x.
exactly. They don't want to wait 2 years for the 10x or even like 5 years for the 10x, which is insane because it outperforms all of the
Yeah.
S&P and everything. I was thinking, it's like, which is like, I wonder if I do wonder if we will see the same level because obviously, like 2021 was COVID. We had a lot of money printing. Like naturally, people had a lot more money
Yeah.
because they had to stay home. There's more disposable income. People then kind of came into the space. It's going to be interesting, and it might do, but and I hope it does. But it'll be very interesting to see when retail does come in, what that looks like this time around. Because yeah, I agree. I think it's all been institutional right now, and I wouldn't say we've seen huge influxes of retail into the industry, which is interesting because like you say, we're going down further down the consumer app progression. We're starting to see slowly more consumer apps be successful to the Web2 audience, but it's in a very different manner to what we saw last cycle.
Yeah, and I think a lot of that can be attributed to, like you said, in COVID. I just think from a global economic standpoint, we were in a better spot, more discretionary income, more time in their hands to get interested and check out things like crypto and altcoins. Whereas now, I think just from a macro perspective, most people aren't in a position where they have a ton of money, and I don't think you really most people aren't participating in these high risk type assets when they don't have
Yeah,
discretionary income to risk. So I do think it's a more of a global economic, reason for not seeing retail at this point. If we can get to the point where that starts to change, I think that's when we'll see that retail come into these, longer tail assets. But really none of us know when that will be or how soon it will be. So it'll be interesting. Maybe I'm completely wrong and it's just retail just hasn't, participated. But
feels
I
weird though with the price action we've seen.
yeah, it does feel like, and I think it makes sense that the majors would go up because you have these institutions who are basically trying to protect their value. And when the US dollar, for example, is devaluing, they're going to find risk assets that they can put it in that are going to potentially outperform and really like maintain their purchasing power. So I think that's what we've seen mainly this cycle is like institutions and more savvy investors getting into the space, but retail is still kind of on the sideline.
Yeah, I'm excited for more retail to come in, but on the evolution, you obviously mentioned there's a lot of token saturation. I think we've seen a lot of that, and I think the market's matured in terms of like not just the institutional, but those who do participate in Web3 have also matured in terms of the tokens they decide to back and invest in. Last cycle, I think, was all based on speculation and being sold visions. Like,
Yeah.
and there was very few projects that had products that you could then evaluate them on their product. It was all pitch deck and marketing. It was
Yeah.
like in many ways that is how a lot of the liquidity flowed. Is like who was the best marketing team, and the liquidity would flow to that because we still see it a little bit. Like attention does drive liquidity in this
Yeah.
space, but there's no doubt that it's a lot more mature now in terms of who they're picking. And we obviously see now I can't even believe I'm saying it, but a revenue meta of
Yeah.
like companies that are driving good revenue, good profits, and like obviously it depends on their tokenomics, but it tends to we've seen a stronger narrative with there with like hyperliquid, everything like that. What is your view on that transition in the market specifically?
Yeah, I mean, I think it's a really good way for this industry to go because, like you mentioned before, a lot of the previous cycles, it was basically based on a future vision. And even if they achieved that vision, there was no clear way that they're going to be able to return value to like the holders of the token or even just the protocol. Whereas now you are seeing a lot more applications and protocols that are built, for very specific purposes that drive revenue. And so I've actually probably for the last year been really looking at those closely, and those are the ones I've been investing in. It's like looking at from a more traditional standpoint, like you would in Web 2, like revenue multiples, like what is your valuation versus how much revenue you're actually producing. And they're starting to become these different apps that are actually producing significant amounts of revenue. And then when you compare them to the market cap, it's maybe 5x or 3x. So basically, what that's saying, and within like 3 years, their annualized revenues should be able to capture enough value to actually support your valuation, which to me is very good thing to see in any sort of like business is that there's a path to being profitable and even sustainable at your valuation. And I think there's only a handful of products that are actually doing that. So I've been really focused in on those projects and, thinking about it more from like a 5 to 10 year perspective, even longer, as these will be the ones that will outperform. And I think we've actually seen them start to outperform even in this current cycle, because I think this, like you said, it's becoming more of a meta where people aren't just looking at the tech and the vision, they're actually looking at what are you what service are you offering or what application are you offering, and is it driving fees and revenue. And that's ultimately a great thing for this entire crypto economy, because for so long there's really nothing supporting these valuations.
Yeah.
And that's a scary place to be.
Yeah, and I think that's why we saw such insane drop offs. And like it's the same reason why we see a lot of why in my opinion, why we saw a lot of teams end up having to go bust or like they end up closing
Hmm.
down. I think there was like a massive misalignment of incentive
Yeah.
in this industry. I still think there is. I think we're getting better. I think the incentive, like I say, last cycle was like invest in teams that fundamentally could market very well. They could then have a good token launch or NFT mint or whatever that looks like, make revenue from that. And like that was kind of the meta, and less around okay, product, what is the actual business plan, how they're actually going to make revenue, how do they then continue to scale, and everything like that. I still think there's some misalignment of incentive in that side, because I was everything from like VCs were giving money to like teams that could do that, and like it was just all the way through, and then creators were getting paid lots to market those ones that could
Yeah.
do very well, and it kind of went all the way through. But we're starting to see now like yeah, the ones that are getting more investment are models that are proven. Obviously one of those big ones is dexes or places that take transaction fees on in speculative markets. Even like you look at Polymarket, you also then look at the DeFi side of things like Hyperliquid, and there's some interesting models there. But yeah, I think fundamentally it's very good for the space. We're maturing a lot more, and I think teams are now getting the sense of like, okay, if we want to launch a token, like we got to have a clear reason why this token is going to do well
Yeah.
long term. And right now, and I think it should be for the foreseeable, is like, okay, we need to be able to prove that we can drive revenue for this company,
Yeah.
which I think is very interesting. But on that topic specifically, obviously, we're in beautiful Mykonos, and we are here obviously through Bolt Liquidity and Club Zero. Can you give a little bit of a rundown of what Bolt Liquidity is specifically?
Yeah, happy to. I mean, Bolt liquidity is a concept that we kind of designed based off of issues that we as like builders, but then users have faced in this space for a long time. And it's really around like inefficiency of liquidity and really swapping. One thing that we've kind of realized and most people have just come to accept in this space is that when you do a swap on like a traditional AMM like Uniswap, you're basically going to have a certain amount of slippage that comes with it, especially as your trade size scales. And that slippage can become quite significant if it's a couple percent of, ten to $100,000. That that adds up pretty quick. So what we were trying to do is figure out a way that we could fix that. And the reason you have slippage is for a few different reasons. With typical AMMs, you have liquidity pools that are two-sided. So the price of that asset is being determined both by the balance of the two assets and the depth of that liquidity. So what we were trying to solve is how could we fix this in a way where the price isn't being determined by this balance and depth so much, because then when you have large swaps, it becomes unbalanced and you're forced to take on a worse price for that pool to basically essentially come back to balance. And that's where Bolt Liquidity came in. So what we designed is essentially a zero slippage liquidity network is kind of how we frame it. And what we're offering is essentially a deterministic price for an asset. So we source the price from a centralized exchange where typically it's the most liquid and you're going to get the most efficient price, and we bring it on chain. So we're essentially trying to recreate these centralized exchange liquidity conditions on chain for users so that they don't have to face slippage and they don't have to worry about, when doing a swap not getting what they're supposed to. Um, and what's unique about it as well is that we use single-sided liquidity pools on chain to actually execute these orders. So there is no balancing of a pool that affects the price, and the depth of the liquidity is not as important because it's not not determining your price. So if you have like $100,000 of liquidity, you can do $100,000 swap on that asset with zero slippage because it's immediately filled on chain.
Yeah.
So it's a pretty unique method. It's similar to something like an RFQ, which I'm happy to dive in a little bit with a few benefits, I think, that preserve the composability and decentralized part of DeFi.
Interesting. Yeah, I'd love to dive into that, but before we do, I think a lot of people in Web3 participate swapping tokens without truly even realizing that. Obviously, they see the slippage warnings when they
Yeah.
do that stuff, but they don't realize the scale at how much slippage impacts this whole industry. Are you able to give like a broader piece on just like what that looks like for the whole industry in terms of how much it impacts people's trades on a slippage perspective?
Yeah, I mean, from what we know, there's there's billions of dollars being lost to slippage, and this just adds up over time. When every swap that occurs, you're taking sometimes it's 0.25% of it is slippage, but sometimes, especially if you're on longer tail assets or assets that don't have deep liquidity, you could be taking on 3 to 5% slippage, and that becomes significant to traders to the point that they will look for better places to get that asset. Sometimes that means going off chain to a centralized exchange, which obviously anyone building in this space doesn't want to see. We want to see you on chain, keeping custody of your assets. Um, and then, or they'll go to aggregators. And that's what we've found has become the most common is people going to an aggregator that essentially will just look at all the different available pools and try to get you the best price. Although that's good and it's getting you closer to a solution, you still take on slippage. You're just finding the place with the least amount of slippage. So with Bolt, what we're trying to do is essentially work directly with the existing DeFi apps to give them an additional liquidity source where there is no slippage. And therefore, if we have the best price, then they'll route through our pools and the user will get the most efficient price available and they'll get exactly the amount of tokens they would expect to get on that swap without having to worry about losing money to slippage. And it just basically puts money right back in your pocket. I think to a lot of people, that's, very enticing.
Yeah, I think especially as people become more and more aware of how much money they've probably lost through slippage, they'll start to realize how big this really is. And
Hmm.
for those that aren't familiar with Web3 specifically, slippage is like the equivalent of like buying a pizza, but obviously a slice is taken out of it, or buying a burger, but someone's already taken a bite out of it. And like, there's a lot of stuff that like, if you're to do it if you're to see it visually outside of just when you're doing these trades or these
Yeah.
transactions, I think a lot more people would be frustrated with what is going on. Whereas a lot of it kind of goes on not behind the scenes. Obviously, there's warnings, like I say, but a lot of it is less visual in many ways, or they're not able to see the compound effect of having slippage on their trades day in,
Yes.
day out. And like, okay, like it's 1% here, it's not that big of a deal. 3% here, not that big of a deal. But the more time you spend in the space, the more money you end up trading, the more money you end up making, the higher those margins become. And I think it's really interesting what you guys are building, to be able to allow people to avoid that and be able to use that money in better places. But obviously, you are not the only ones that work in this similar industry or this similar niche within the industry. What makes what you guys are coming to market with unique and have an edge compared to what's already out in the market?
Yeah. So I think when you look at like an AMM or an order book, I think where the advantages is just that our liquidity is much more efficient because we're executing at whatever price is posted. So it doesn't require you to, like fill an order book with a ton of liquidity or have multiple different pools for like ETH, for example. Like you might have a USDC ETH, a USDT ETH pool. So you're fragmenting that liquidity. So I think from that perspective, what's unique is that we're not having to deal with any of that, and we're just giving you the price and executing at that price. And then when you compare it to something like an RFQ, so if people aren't so familiar with it, it's request for quote, and it's something like CowSwap does. And essentially what they do is it's very similar to Bolt. They post a price from whatever oracle or source they're getting their price from, and then they fill it using solvers off chain. So it's like intense essentially. And although it accomplishes a very similar goal, what it's doing is it's creating a break in like the idea of decentralization. Because when you use an off-chain intent-based method, you have to use off-chain solvers who are third parties that have to be trusted to execute these trades and do the computations um, honestly. And you can't really verify that as a user or as a protocol. So it adds this additional risk factor and really breaks the composability of the smart contracts, which means it's much harder for DeFi applications or people building, bots or things to actually tap into them. So it's very restrictive from the builder side. And it also just kind of goes against the ethos of decentralization and trust by having to rely on these third parties to do all this work off chain. So we thought it was super important to bring it all on chain. So everything with Bolt Liquidity is done on chain, fully verifiable and composable. And we think that makes a huge difference to people who are trying to either build on top of it or plug us into their existing applications. And from a user standpoint, although they may not even realize they're using it, if they're just using an aggregator and it's using our liquidity, I think there's a certain level of confidence you get when you know everything is verifiable on chain, and you're not relying on off-chain solvers that you have no insight into how they're doing their process.
Yeah, I think the decentralization model is obviously one of the core reasons a lot of people use the Web3 technology side of things. How have you found from the initial talks with
Yeah.
partners and so forth in terms of the reception to what you guys are building?
The reception has been surprisingly good. Like we thought we had a really good idea, right? But you really don't know until you get validation from the potential users of the tech. And as we went out and talked to teams, we found that there was a lot of interest in the concept of zero slippage because I think they all understand there's this problem where people are just losing money or value every time they swap. And if you're an aggregator, you're competing on price. To keep a user, you have to give them the best price, or else they'll find somewhere else to get it. So we found that they are very interested in that, and they are also very keen to the idea of keeping stuff on chain. I think they see that as a very big value prop for them because I mean we call it DeFi, right? It's decentralized finance, and some of these mechanisms are basically eliminating some of that decentralization. So as much as they can keep stuff on chain, verifiable and composable, they want to. And I think we're the only one I'm aware of that's doing it this way. I think it's just a bit harder. It's easier, I should say, to do it off chain, right? It might be even slightly more cost effective to do it off chain, but I think most teams are willing to sacrifice that to get a product that they can trust and is really, keeping the ethos of decentralization.
Yeah, I think it comes at a cost, but I think for the longevity and like the long term of like what Web3 is trying to achieve, I think it's a very pivotal part. In terms of the niche that you guys are going into, obviously we speak about revenue generating
Mhm.
companies. What does I guess the broader market look like for a product like this? Like what is the overall value, or what are some of the big winners that we currently see in that market? And what are you guys set to achieve in the first year for Bolt Liquidity?
Yeah, I mean, I would say it's very similar to something like CowSwap, in the sense that we're really just trying to execute trades for people at an efficient price. The revenue model is also very similar. So we basically what we do is we take a fee on every trade, and most of that fee is actually going back to the liquidity providers and the market makers, because part of what makes this all work is as someone's filling an order on chain, someone is basically doing the opposite of that order on a centralized exchange at pretty much the same price, and then moving that liquidity back so that you're constantly refilling these pools and you can turn over that liquidity more often. So from an LP's perspective, they're earning more on the liquidity they have and doesn't require you to provide as much liquidity. Um, and so they'll get a fee for doing that, for basically providing that service and the liquidity. And then the protocol itself will take a small piece of the fees as well. But even with these fees, they're very low. But you can think we haven't really established a set one, but it's probably between 20-25 basis points. So 0.25%, which is typically what you're paying for a swap fee on a DEX. So it's equivalent to that. And that's not factoring in the slippage as well.
Yeah.
So when you eliminate the slippage and you add the fee, the user is still coming out with a much better return. So we think that model will work well because it allows us to sustain the protocol, continue to innovate and maintain it, while still getting the user the best possible price and really allowing these existing applications to give the user a better experience by, again, getting them more efficient swaps and really for their LPs who have to provide less liquidity.
Yeah, I think it's definitely a model we've seen be very effective from a business model. It's just the fees model on like
Yeah.
building infrastructure that makes things better for people. And you just for that service you take a fee for it. And like I mean, we've seen some of the most successful companies in Web3 use this model, and I think it's the most sustainable one,
Yeah.
in my opinion, in many ways. But obviously, we're also here with Club Zero,
Yeah.
and maybe there'll be a few pieces of content out around Club Zero by the time this comes out. But what is Club Zero all about, and what do you guys set out to achieve for that side of everything?
Yeah, so Club Zero is really like a creator collective that we're trying to put together around Bolt. Although it's more of a B2B type product, um, the issue it solves is primarily affecting users. So we're trying to use this to really like educate and get people to be more aware of things like slippage and some of the issues that they're facing on a day-to-day basis when using web3 or applications, and really just put a spotlight on it so they can understand what makes Bolt valuable and what we're trying to achieve. And we're trying to do it in fun ways that are engaging. We've seen a lot of the same things in this space with how people distribute information and content. I think at times Web3 can be really stale. So what we're trying to do is find a unique way to still like, focus on these issues and explain to people what the value prop of Bolt is in a way that's fun, engaging, and gets people wanting to participate. And so Club Zero will be a collective of creators. And what we're trying to do is get people to come get involved and be part of this group that's going to just create cool content and educate users on DeFi and, you know, basically what Bolt's trying to achieve. And from there, we can see where it goes. But ultimately, it's just a fun way for us to talk about what we're doing and really just focus on the issues at hand that we think we can solve.
Yeah, it's interesting because obviously being a victim to slippage a lot, but the more we've spoken on this trip around content that can visualize what the impact of
Yeah.
slippage really it's actually is that quite fun. I think
Yeah.
there's a lot of content that can be made around it, because it's like in itself it's quite a simple concept,
Yeah.
but I
Not very
think
sexy.
it's not very sexy, but I also think a lot of like Web3 people are kind of like skip over it. They don't like fully go into the depth of understanding what it all means and stuff like that. And I think yeah, I think instead of describing it on a technical basis, I think showing stuff's a lot better. And I mean, we've seen like from like a brand perspective, we're seeing lifestyle content overall on the timeline and in Web3 do very well. And it's same as Web2, right?
Yeah.
Web2, we see the exact same trend of people prefer personified content that kind of tells stories through it. And I think it's like definitely like even outside of Club Zero specifically, the creator economy is only becoming more and more powerful. Even like you see with AI and everything like that. AI is great for helping build tools, and it's still and it is doing a lot of content. but there's a lot of impact coming from creators in this world. And yeah, I mean, I'm very obviously privileged to be here with you guys for the first event. I think it's very exciting, and there's going to be a lot of fun content to come out of it. Um, but yeah, I guess in terms of wrapping it up and looking into the future for Bolt Liquidity specifically, what are you most excited for in the next 6 months to a year?
I'm probably most excited to get the outpost deployed on more networks. So right now we built a Cosmosm based version that we deployed on Archway, and that was really our initial um, kind of like MVP, if you will, to showcase that this product works. And we had built in the Cosmos space before, so we were familiar with the stack. So we started there, but we're also getting close to finishing up our Move implementation, and so we'll be deploying it on Sui. And then after that, we'll focus on the EVM side of things where we can really start to service all these different L2s and EVM platforms. So I'm most excited just to see it grow and really start to support more networks so that we can help more users, get better value for their trades. And it seems like such a small thing because like you said, slippage isn't super notable to people because I think we've just come to accept it as part of the industry. And so there's no way around it. But we've identified a solution that we think can get you around that and offer you a better product. And so I'm excited for people to benefit from that, even if they don't know they're benefiting from it. For example, using just an aggregator that they normally use, but now there's a better price for you. So yeah, that's exciting, and especially because I think the SUI ecosystem has grown a ton over the past year or so. I think they have a lot of momentum, and we really like the Move stack. So it's been fun building it, and I think we're all excited to see it, launch there and see what type of traction we can get.
Yeah, they've been killing it over at Sui, so I'm excited to see you guys go into that ecosystem. And yeah, I think sometimes you mentioned like it's a lot of people have come to accept it. I think sometimes it's those like the simplest things, the simplest products that fix a problem for mass people
Yeah.
is actually sometimes, well, often the most successful. But one question I like to end things off with is outside of Web3, outside of work, everything like that can be related to them. But what's one resource that has been most impactful for you? Some people say AI, some people have a book, a podcast, a mentor, anything like that. What have you found most impactful to your journey?
Well, I'd say as of late, AI has been extremely helpful in a lot of things I do. But honestly, I would just say like being engaged in the community and like talking to founders and leaders in the space is been the most helpful by far. Just replying even to their tweets, sometimes you can get a response from them, and sometimes it just gives you a lot more insight into how they're thinking about things or answers a question that you just couldn't find an answer for. And I think that is what makes this space unique is just your access to these people, at least at this time. So I'd say the biggest resource you have is like socials and Telegram chats and Discords, and really just like trying to get in touch with the core minds in this space and builders. And most of them are very willing to reach out and provide you with information or help you through things. And maybe some of them will become a mentor to you in the future. So yeah, I would say you just gotta, make that leap of faith. Not everyone's gonna reply, but I think there's a lot of value in just engaging with those people.
Yeah, I've never thought about it, but that is so true. I think that's been a huge impact for me. I mean, even the podcast itself, like I've just shot so many shots of like
Yeah.
when I first started, it was very much kind of like okay, get friends and that on, and then after that, it was just to shoot the shots, and like it is actually, it's like it blew me away in terms of the opportunity and how open a lot of people are. If you go to them with the right intent, I think that's the biggest thing in Web3 is like a lot of people approach a lot of people from a transactional perspective,
Yeah.
and sometimes even for the podcast, I guess it is a little bit. But I think if you go through the right intent and the right approach of like you just do want to do something great and cool, or you just want to meet someone and just like you just want to connect from a genuine
Yeah.
perspective, I think a lot of people are open to that, and I think a lot of people enjoy doing that actually in this space. I think it's just you've got to approach it from a very genuine perspective. But I totally agree. I think it's so impactful. But thank you very much. This has been amazing, super insightful, and I think I'm super excited to see you guys come to market with everything. Yeah, like I say, I think it's an exciting time because it is something that will impact a lot of this space as you guys begin to scale. And yeah, super excited to see how that all goes. And thank you very much for coming on.
Yeah. No, thank you for having me and giving me the platform to talk about Bolt and kind of, some of my background. It was a pleasure and couldn't have picked a more beautiful place to film it. So thanks again, man.
Definitely couldn't. Thank you guys for making this all possible.